we're going to have a lot of GP auto tune voice this week. I have a feeling.
I'm gonna let you do the most of the talking.
Yeah, I think this week's going to be heavy GP auto tune on the TikToks. Hey guys, we're back. Well, two of the three amigos are back. It's your boy Bags and G Apaiza. We've got our counterpart Nick on. It's his anniversary. Happy anniversary, Nick. It's a well-deserved reason to take a night off, but we're happy that you decided to join us. It is Monday, August 28th. We're a little bit later than we normally start, but that's okay. GP and I needed to catch up on some things, and we're here now, and we're not going to go anywhere. We're going to give you a full hour's worth of time, so we're going to need some input from you, our listeners, because GP, I don't know about you, but this market is starting to make me a little tired of, before we started the call, you said sideways for 3 months. We've been down for a month, but we've been sideways, right, for 3 months. And everybody and their brothers like, oh, it's a head and shoulders. It's a head and shoulders. So I'm just kind of getting tired of it.
Yeah, there's been a lot of that, right? And this is what it looks. I think we've talked about this so many times, which is this is what it looks like when there's not free money. There's no V shapes. There's no like rocket ships and stuff like that. Things grind and grind hard, right? We've been used to free money, so we've seen a lot of V shapes over the years. But if you look past before 2008, things grind for a long time before they start moving higher. I always remember Microsoft is my one play, right? I bought it at like I think 24, and for years I just watched it gyrate between 40 and 24, and then it finally breaks out and I sell, and I'm like, oh, I maybe need to understand what all this stuff is, which is when I started to get into charting and technicals a lot more, because that what I refer to them as, I was part of the break-evener crew, right?
Yep.
I was like, oh,
explain the break-evener crew to the uninitiated.
So this is psychology, right? And I think a lot of people look at technicals and think about, oh, it's a chart. No, the chart only represents what humans, aka machines, whatever you want to call it, are doing. So you'll see a lot of these bases form. You'll get to the top of the range and then the bottom of the range, and you'll get to the top, you'll get excited, and it goes back to the bottom, and you're like, oh crap, I should have sold. And then it gets back to the top, you're like, yeah, it's finally gonna go, and then back to the bottom. And then that does it for a long time. It gyrates. They're basically building a position in this name, and sometimes that position can build a name for 6 months and break out, could be a year, could be, in Microsoft's case, if you go back between 2001 and 2013, it was 13 years of going sideways where you're like, holy crap, this is annoying. But ultimately they had a big move higher, and they had capitulated into the biggest company on the planet. And until they swapped out their CEO, which is when it popped, which is when I sold because I didn't know any better. That was about a decade ago. They also swapped into what now is overlooked for Amazon quite often is AWS. Amazon was the first people to start the whole cloud, but when they swapped the CEO at Microsoft, they also swapped to doing Azure and cloud-based stuff. So it broke out, and it has not looked back. When you have a 13-year base and it breaks out, it usually does not look back, right? And so the break-even crew is the one after 13 years of holding sells it for break-even and then watches it run in their face. That was me with Microsoft, and I vowed to myself that I'd never do it again. But it's trading, so it happens anyway.
Well, you've got a 16-year base here. If you look from the beginning of the great financial crisis in the dot-com bubble to January 2016, I mean, if you were in 1999 or 2000, took you till 2016 in Microsoft to be profitable. I mean, that's a long time.
Yeah. So for me, the base was above 38. So that was the big kind of pivot.
Yeah. I see what
And
you're talking
so,
about too, but yeah, I mean,
yeah,
if you got in at the peak, it took you a long time to finally recover.
which is, dude, if you look at the SPY is up 184% since 2000. 23 years that it's taken the SPY to nearly double, not double, nearly double. And yet everyone's still calling for a parabolic blow off top type move. I don't think people understand the definition of what a parabola is, because that's not a parabola. It took 23 years to break out of the double top from 2000 to 2008. That's what a double top looks like. That's what people who call double tops in these small little formations drive me nuts. It's this is this is what double tops are meant to be, right? The fundamental part of this conversation is you have two major tops and it's a breakdown pattern. And so you had the breakdown pattern in 2008, 2009. Obviously, it broke down hard because the whole world was about to collapse, the financial system. And once we reclaim the 2000 and 2008 highs is when the real bull market began. Everyone was break even until that moment in the SPY, in the Qs, in the IWM, or whatever you want to say. So for people to say, oh, the bull market began in March 2009, they have no clue, to my opinion, right? That's just my opinion. So
Yeah.
if you take it from there, we're up 184%.
Yeah, you're
And
really looking at April of 2013.
correct. And then we
And-
went sideways after we broke out for nearly 2 years.
yeah.
2 years we went sideways after breaking a double top.
True that.
So I don't know. People can continue to talk about parabolas. I'm going to talk about the fact that if you invested in the SPY in 2000 and haven't looked at it, you've made a grand total of 7% a year, or 6.84%, I think it is, or whatever the number is, in 23 years. That's nothing crazy. That's not a lot.
Our good friend Randy didn't get here in time. He was fashionably late like us, so he didn't get the tables and chairs set up tonight. But he asked, but didn't your risk management take you out? And I can't speak for GP, but if I were in this position as a young trader, sometimes it's hard to hit that sell button when you're inexperienced, Randy. And I think that you may not know what risk management is. You may know what it is, but you may not know how to act on it. I can't say that was the case for GP, for Microsoft in that case, but that's why a lot of people sell when they break even, is because, oh, I'm out of this dead money now. I can do something else with it. And usually what I have found is if you held on for it to come back to even money, that's the wrong time to sell. That's when it starts going higher.
What book was that from?
The Art of Execution.
It was, right? If you're not selling when you're down 60%, then why aren't you buying more? And if you're not buying, you should be selling the hell out of your position.
That's right. You're either buying or selling. Standing still is the worst option to be in.
Yep. So back in 2008, you could say risk management would take you out, but you also talk about all the theories of the SPY, which is dollar cost average. So do you sell out of your entire position, or do you keep grinding to make more money and make sure you have cash to put in when these things happen, right? Because they happen in the markets. You have these sell-offs, so you should have been putting money in. The problem is most people don't have money when the markets actually bottom because they never sold. And so in 2008, I was just starting my journey. I didn't know anything. I was just like, okay, cool. It's time to get ready. But it took a while. It takes a while to build this knowledge, right? There's nothing that changes screen time and experience.
Yeah, I think Nick said that a few weeks ago, right? It's seat time, and people expect to make a lot of money really quickly. And at the end of the day, it may come quickly, but it'll go just as quickly. And what you learn by being an active participant in the market is that it is a grind. I interacted with the professor today on Twitter, and I was like, I hope to be done between 10 and 10:30 every day. And he said, well, I hope to not have to do anything any day. And that's the point that we all want to get to, right? Is where you don't have to trade, or you don't have to be active. You can just sort of let your longs or whatever's winning win and keep going. But that takes a lot of hours. That takes a lot of time, a lot of patience to get to that point where you're able to just be hands off on a given day, given week, given month.
I say there's a psych shift as well. Whereas, our parents' generation or the older generations use the stock market to generate wealth over time. And yeah, there's traders and brokers and stuff like that for sure, right? Obviously, the Wolf of Wall Street and all that stuff exists. I'm not saying that, but it feels like there are a lot more people are using the stock market as a way to leave their jobs that they don't enjoy anymore and get away from the grind in general, right? And so the risk management profile has probably changed as well, which people are quicker to get in and out. That's all, all the modern day tools also. But it was hard to sell in the 80s and 90s. You had to call a broker. It wasn't like click a button and you were done. And there was fees. There was $100 fees every time you wanted to sell.
Yeah. I mean, you got, for what, E-Trade, TD Ameritrade, all these other brokers that came online in the 2000s that really revolutionized where we have trading today. I mean, obviously, in the last 5 to 10 years, you have the Robin Hoods and all those newer brokers, but the accessibility to be able to grow your money through investment vehicles has never been more accessible.
Yeah, exactly. I joined Daytech. They got bought by TD Ameritrade, but Daytech was one of the ones I started. It was $25 a trade, right? And so round trip was $50. You had to make $50 on a transaction, otherwise you were losing money.
Yeah, and it got to a point where I can remember the commercials, like, now trades as low as $9.99. It was a race to zero, which is where we're at now. That every trade except for option trades are basically free.
Yeah,
I mean, they're selling your order flow or whatever else. They're making some on the back end, but anyway. Randy says, isn't the goal to buy when things are down? That's what I don't get about people who buy breakouts. I think, Randy, on that point, and GP, you can back me up here. You can tell me I'm crazy. I think it can be tough always bottom picking or bottom fishing. I think with a breakout, like, you can see that price is definitely going higher. So yeah, you're probably not going to make maybe as much on common shares playing a breakout as you would buying the bottom. But I don't think that, I think coming back to risk management, I think buying the breakout is a safer way, at least for me, to be positioned in some names. Don't get me wrong. I like to bottom fish with the best of them, and I've been able to hit a few of those that I really liked. But yeah, you want to buy low, sell high generally, but I think the breakout gives you a point, especially if you're buying the retest of that breakout. You're buying the bottom, right, of the breakout, which is ideal if the stock's going to keep going higher.
So exactly. I think strength begets strength. There's a reason something's strong, right? In this current environment where people are still faffing around with the macros and stuff like that, a lot of the breakouts are becoming failures. A lot of breakdowns are becoming failures. Everything's kind of this gigantic trap. But in general, when you break out of a multi year base, right? Like if you look at the SPY, when the SPY broke out in 2013, it was March 4th week 2013 off the double top. It cleared right above that double top high, and then it went sideways for like 5 or 6 weeks, and then broke out higher, but then came back and retested. If you buy the retest, which is always more powerful, this retest breakout is and holds, right? So you want to see if the breakout comes back and retests and holds, and if it doesn't hold, then that's your exit point. But when it does hold and you never look back from here, the SPY is up from that point 184% from 2013. So now you have 184% over 10 years, not a 20-year mark, right? So your returns are much better if you had just bought the retest of the breakout. And so strength does beget strength. If you're like trying to buy, I don't know, Fubo, we've talked about Fubo, right? Like that, you don't want to buy that weakness. That's never going back to 60. Never. You might bottom ticket and all of that.
I don't know. It's got an inverse head and shoulders look on the weekly.
But it all matters on what you're also talking about here, right, Randy? I think if you're looking at Microsoft that you know is going to be around a long time, or Amazon or Google and all these names, then yeah, maybe you want to buy low and sell high, right? But if you have an idea that things are going to be basing for a long time, like Amazon, I haven't bought any, I haven't sold any. I knew it was going to, like in the last year and a half, because I knew it's going to be basing a long time, right? So I don't want to spend any money buying this to watch it kind of go sideways for the next 10 years. It's grown as much as it's probably going to grow. And so they can incrementally add revenues until they come up with a new revenue stream. But I'm assuming at some point these guys will start paying out dividends. So that's why I still have the shares. It's a good company, but I don't want to buy the lows here unless I'm going to sell the range. And I'm not going to do that in names like these because I'd rather just build here, right? So on Amazon, I'd want to wait for the breakout, because the dead money for Amazon could be 1 year, could be 16 years, like we talked about with Microsoft. We don't know.
Mr. Wet Blanket on my largest position over here all the time. Amazon just is the whipping boy for GP anymore. Randy,
I love the company, but they just they're huge, right? How do they get to a bigger level? Their multiples just coming down every time they grow more.
Andy Jassy saying AI 45 times in the first 2 minutes of the next earnings report.
Well, that will pop it for like 3%, and then I'll give it back 5% the next day. This is a miserable trader right now.
3% is 3%. Randy says it still has to have a good chart, even at the bottom. I agree, Randy. But I think one thing about bottoms that we have all witnessed, if you've been in the market over the past, let's just say 3.5 years, is bottoms can be messy. They're not as clean necessarily as the 2020 V straight up. I think there can be a lot of volatility that you can think that you're buying low, right? And then all of a sudden you're down 8, 12, 15% in another week or two. And some people don't have the intestinal fortitude for that. Now, that doesn't mean that it's still not better than your cost per share, or your average isn't better once it finally does break out. Of course, whatever that short-term pain was, right? It's long-term gain, but I don't think, to me, it's easier to spot the retest of the breakout than it is to be able to sit here and try to pick bottoms that could fall through. Again, I like the bottom fish. I'm not saying there's anything wrong with it. And Randy, you've had an impeccable record of being able to find some pretty great names. So I think the important thing for us all to understand is we all have systems and styles that work for us, and stick to the plan until it doesn't work anymore. Right, GP?
Yeah, let's actually take an example, right? Like Randy's example. There's a few names that have not participated at all this year. And the three that come to mind are Disney, PayPal, and Square. Are you buying any of those? To
Disney,
me,
PayPal,
there's
and
nothing on
Square.
the charts that says you should be buying these. Nothing. Right?
No.
And so while the Qs, if you just bought the Qs, you'd be up 37% or something like that this year. Instead, you can faff around in Disney, Square, and PayPal. And so where's the bottom? The bottom could be stuck in this range for another 10 years. Disney has gone nowhere for a decade.
Yeah, 2013.
Right? This is the streaming is going to take it to Disney, nothing. PayPal, 7 years, 6 years. Square, right? Like, so if you're bottom fishing, you also have to have risk management ultimately, right?
Yeah, I think so.
Yeah. And so to me, that's why even though 2023 has shown that breakouts are all false and breakdowns are all false and pretty much we're going sideways for the entire year in so many
Yes,
names.
Randy, I love fresh. You know, I love fresh works. I put that out there in the universe. I don't know how many times. Anyway, Randy says I would rather buy fresh BWXT and Aries. He's not a
Yeah,
big
but
cat
those are
person.
all on the verge of breaking out,
Yeah,
not
yeah.
breaking down.
I've been pounding the table on fresh for a long time, and I'm not even in it.
Right? Fresh is about to break out of its IPO base, right? That's BWXT took out all-time highs. So he's talking about charts that are already on the top. ARES also took out all-time highs last couple weeks ago. This I don't really understand.
Relax and Flow says I only buy SPY calls, and honestly, it goes up. Been buying them since 390. This is not investment advice, but there's some horse sense there. Depends how far out you're buying, but yeah, over the long arc of history, SPY goes higher.
Yeah. Right? Like,
Dog
so
Papa says Tesla, NVIDIA, when is a good time to go all in, GP?
$101. Why are we talking about going all in at $238? You had
Oh.
an opportunity for 3 or 4 weeks to buy under 123. And I talked about it relentlessly on Stock Twits as well.
And Tesla. Yeah, and Tesla.
Yeah, but this is another one. This gives back routinely in a 5-year span 50 to 80% of this is an $800 billion company, and it gives back 50 to 80% routinely every couple of years.
On the reg.
I as a long-term holder of Tesla, I've experienced so many drawdowns. Now it's just like I'm just gonna, when you get to a point where it really makes sense, you should be buying more.
I think part of everything we say every week, and this week is no exception, is it's all time frame, right? Like I have done really well buying QQQ puts in the mornings. I've done really well doing that, and I'm out within an hour of the trading day. I'm done, but that doesn't mean I'm bearish forever. QQQ, right? Like for that time period that I'm trading, I can be bearish or bullish. So in everything we do, I think it all matters on what time frame is. And if we're talking NVIDIA, my time frame, if it's more than day trading or swing trading, like I like NVIDIA higher, but obviously you can tell from these wicks, like there was plenty of money being made intraday or swinging to the downside. So it's hard for me to always look at things like the only way to make money is for stocks to go in one direction. So I can be bearish the first 30 minutes of the day and bullish for the rest of my life. And that doesn't make me a bear, and that probably makes me more of a bull. But I think everything that we talk about, we've got to put in perspective of what's the time frame.
Yeah, you can, if you were bearish on Friday after I think I posted the chart too, but there was no reason to be a bear after like 11 o'clock on Friday. It showed you we had, I think the contract volume in the NQs and the ES were near where they were in November of 2022. Like you were showing capitulation type volume in contracts. And it literally just stopped going down after that, after like the first hour. And then we kind of based and slightly broke out the rest of the day. But yeah, you can be a bull. That's being a trader, right? Being a bull and bear in the same day.
Yeah. I mean, I damn near bottom tick today on the Qs because I decided to go have lunch with the kids. And 15 minutes later, all of a sudden the Qs turn up. I'm not at my desk to make a trade, but I'm spending quality time with my boys. I don't care. Like I'm down here somewhere having lunch.
Yeah. Yeah, it makes sense.
You could have round tripped this thing once, twice today.
Oh yeah, you could have done it like 10 times the way it was going.
Anyway.
Understood, Randy, but you've still made higher lows for 4 straight years in BWXT. So the chart's still trending up.
What is BWXT?
Whatever one he posted, right? The
BWX Technologies. What did they do, Randy? Do you know? Do you care?
And he said it best. He'd rather invest in those names than Disney, Square, and PayPal, because ultimately those names are in downtrends, and we don't know when the downtrend will end, if it ever will end. But ultimately, you got to find what works for you, right? As you said, Bags, this is that's the most important part of this conversation.
Uranium. It's a uranium something. I threw out a chart request earlier today because I was bored, honestly. And I got an interesting chart. I have no idea who they are or what they do. AJG, Arthur J. Gallagher Company. And all this sucker does is go higher. Look at that. I have no idea who or what this is. Randy, you know?
Nuclear, military, and commercial. That makes sense. Must be a bunch of Congress and Senate in there.
Insurance brokers, services, finance is what it says on TradingView. AJG. Yeah, it's an insurance company.
Stick to your rules, relax and flow. Always stick to your rules.
Anyway, I just charted this and I was like, if you're in it, why sell it? Until it shows you a reason to sell, like that anyway. Question, let's say I have a certain line drawn as support and price action doesn't dip that low and my limit buys don't trigger. Should I chase price or stick with my rules?
Draw better lines.
This is not financial advice, but I completely agree with sticking to my own rules. I find that I get in the most trouble when I think the rules don't apply to me anymore. And I have bad trades. We all do. And it usually comes from either me having FOMO or me not having a good plan on entries and exits. And that has to do with FOMO. We were talking a couple of weeks ago just about being in the mental space to be an active market participant. I don't necessarily consider that FOMO, but there are days where mentally I'm not in the game and I shouldn't be trying to be in the game. So that would be my other reference of time.
Mm-hmm.
But yeah, always stick to your rules. Always stick to your rules. Unless your rules are shit or you need to draw better lines, as GP said. But I'm not
as in, I mean, my lines when I first started were a lot worse than, because I thought every little pivot was a was a support line, and it's like, no, you got to see what the price action kind of represented around that,
Yeah.
and I think that's important to factor in, but that comes with experience. That's not going to come overnight. You'll be like, hey, this stock has continued to come here and people have shown up to buy. So maybe this is more of an important line than some random pivot line from 5 years ago.
Well, I also I used to go back from the beginning of time on charts, and you can go back and watch one of the archives, one of the early videos that I did with Maxwell House of Charts for Charity. He asked me why I did that, and I was like, well, because it's all price history. And he's like, well, is Microsoft the same company now as it was 20 years ago, or is Amazon the same company as it was now 20 years ago? And I don't think they are, and that kind of made me think about things differently. So I try to find a good trend, and I think GP has brought this up before. I always like to work at my largest time frame. I'll just do a quick drawing class, if you don't mind, GP.
Yeah, go for it.
When I haven't ever seen a chart, I like to put the line chart on and look at the graph like that. And we're taking Apple here just for shits and gigs. I'll try to find somewhere on the chart that kind of looks, it looks like a pretty decent trend. It's not perfect, but it looks pretty decent. And I'll try to point something like that out. And then I'll turn my candles back on. Not bad. It's pretty close. And then depending if I'm working on the weekly, right, it'll give me more of what I'm looking at, daily, 4 hour, et cetera, et cetera, et cetera. I really like doing that. That's the way I go about setting up a chart for the first time. But I also really love parallel channels, and my mind and my eyes are drawn to them. So when I do that, I'll, instead of just doing a line, I'll do that first, and then I'll find where did price sort of stop out at, and there it is. And then I'll check my midline here. And basically that'll be another resistance point. And we'll see if that holds up over time. And it's okay to change things a little bit. Like maybe it's more like that, right? Maybe it had some wicks above and then fell, right? There's nothing wrong with a trend line being taken out to the upside or downside and then recover. I mean, we see that happen all the time with moving averages. So why should we be so prophetic about it has to be that way with trend lines? But anyway, that's how I set up my charts going into it. And over time you tweak it and move it just a little bit. But anyway, that's how I look at it.
Yeah. I think for me, it's always about starting with the monthly time frame and then working down from there. So, right, like if you're looking at the Qs, you bring up the Qs. If you're looking at the monthly time frame, that's not a great looking month so far, and we only have 3 days left. So I'm assuming it's going to be some sort of this red formation. And so the question is, do we get back above last month's close, which is 383.68? No, that's probably not going to happen. It'll be a hell of a 3 days here, but based on today, ain't nothing happening in the next 3 days. And then the next portion is the open, which is 370.07. And so that's a possibility that we could move back up here into that kind of range. And then you're looking at the monthly and it's like, okay, well, it tried to break down, tag the 5-month moving average, which is the moving average it kept rejecting all of 2022, is now been holding. So if it continues to hold here and gets back above 370.07, you've now put in an inside month. right? And
Yep.
you want to say, oh, the wick is lower. No, it's the body. It's always the
It's always the
body.
body.
It's always the body. So if we're back above that 370.07, you've kind of put in an inside month off a wick off the, and you can be like, oh, there's a red hammer. That's not bad. Volumes increase. I get all those things. Those are all potential problems. The question is, how does the next month open, right? And you have a MACD that just went positive, that just curled, and you have a test of a 5-month moving average. You need to see it actually close below that 5-month moving average, which it has held since it reclaimed it in January of this year. And look at that, we've had a 30-something% move higher, right?
Yep.
So that's kind of where I start with. Okay, so where do I want to see it close on the month? Where do I want to see it close on the week? The week right now, if you're looking at the week, we're in the top part of last week's wick, which is always a good sign, which means that you could potentially move higher here, right? Operating in the part where there was sellers last week is a sign that the sellers are kind of weak, right? So that's a good place. Now, how are we looking on the daily? The daily is rejecting the 50 SMA, but look at the first, it broke down at the early in August, tried to reclaim it, got rejected hard all the way down to 350, whatever that was. Then tried to reclaim it again, got smoked before J Powell's speech, which is the stupidest thing on the planet. Sorry, it was like, yep, they're gonna do it, and they did it. And so, but what happened on this second attempt to reclaim the 50 SMA, even though they sold it, first of all, there's no follow through. Second of all, it's a higher low. So what are we doing? We're trying, the bulls are stepping in, the bears are having opportunities to break it down, but they're not following through. And now they're trying to reclaim it. So now you have multiple things that are aligning from the monthly all the way down to the daily. Stuff that I look for, right?
Yep. Yep. And then that cascades down, right? Like, while we start here at the monthly and work our way down to smaller time frames, it also works the other way going forward on your indicators. So I pay attention to stochastic and RSI. They're very similar. Stochastic is probably the least lagging indicator that I have, but also the moving averages. So they all, just as we talk about price action and trend lines and looking from the top down, from the bottom up, it's the same way. So if let's go back to the weekly here. We've got a stochastic, which is pointing down. We've got an RSI, which is trying to come back up. But if you look into the smaller time frames, right, like all this builds back up. So we have stochastic and RSI on the 5-minute going higher. On the 15-minute, it's trying to turn on the stochastic. It's going higher on the RSI. So these things work in combination with each other, and it all boils up or melts down, right? So if the RSI is too hot for a long time on the weekly or the monthly, chances are it's going to cool down, and these indicators are going to start slowing down and going or staying oversold. As momentum comes back in, these smaller indicators build up and become more overbought, turning the dailies and the weeklies and the monthlies higher. So it's all correlated. It all goes together. It's like I don't know, peaches and cream, chocolate and chips, peanut butter and jelly, bologna and sandwich, right? So it's all correlated on how all the time frames work together in the end.
Yep. And to answer your question, Randy, really depends on what the trade is, right? If I know it's going to be a short-term trade, then it'll be a daily chart. If I'm looking to swing it a little bit longer, it's a weekly, right? And if I want a larger base kind of, right, like I'm looking at Disney here. Why? Because Disney's at the 200-month moving average. in its history, it doesn't really break too far below this and not recover, right? So if you're looking back a really long time, almost every kind of break has kind of recovered to the upside. So why I'm looking at Disney here? Because on a monthly, this is a pretty important area. Not just because everyone on StockTwits or Twitter or Zwitter or Xiter, or I have no clue what to call it anymore. It's what I'm trying to do, right? If I want to own Disney for a long term, then this is an area where I would be looking to. Have I owned any? No. We even talked about Disney that I thought it was bottoming, and then bought some leaps, and I was like, nope, doesn't look like it's bottoming. So I got out. I think I break even, and then it's just taken a monster.
Well, in fairness, Disney broke down 20% below the 200 monthly and 37% below. So I feel you, GP. I'm just saying that if it breaks,
well, that 37% was when the entire world was about to collapse, right?
Yeah.
So like these are moments that you can start to build positions. I don't mean go full hog and throw your whole wad in there.
And
let's start to watch it.
I'm bringing that up just as the case of it's pretty easy to get out of it once that happens, right? Because only one other time has it broken it, but it didn't close down there on the monthly. Anytime that it's closed down there on the monthly, it has seen a bigger move to the downside.
Yeah. And for that to happen in Disney, you needed the entire global system to financially collapse.
So what happened on this one? This was 2002.
That was just a shitty time in the markets, right? That's post.com. All kinds of stuff was happening around there. When Apple,
you said the world was coming to an end. The markets were collapsing. I saw The Big Short was trending on Netflix, and I decided to watch that again this weekend. And I remember those times very well. I wasn't investing on my own yet. I wish I had money to put to work, obviously, in some of those instances. But I was just starting my career in those days. And I was sure to put 20% of every paycheck that I had coming in 2006, 2007 onward. So I've done okay. I've done okay in the markets. But yeah, I decided to watch The Big Short, and I was like, why is this trending? And I see like the Wall Street memes accounts tweeting about it. And it's like, these people really are bared the F up, aren't they?
They are.
They really are.
And I don't honestly see it. And maybe there's something I don't see from a macroeconomic perspective that's going to shock me. But the only time I've truly been shocked is what they did to the markets during COVID, right? That was just insane. I don't think we've ever seen that type of. We were having limit up and limit downs like every other day.
Well, I wasn't watching CNBC in those days, and I mean, you just hear and see what you do and saw in the news, right? Just the regular news about all the, the banks collapsing, government needing to step in, et cetera, people losing jobs. I mean, I think we all had people who were touched by the great financial crisis in one way or another. I know specifically for my dad, it postponed retirement, right? Because I mean, he had, like everybody else, had his money in 401ks, and he was approaching retirement age, and it forced him to try to recoup some of those losses. Fortunately, he did, but a lot of people didn't. And yeah, it was quite crazy. It was quite crazy how they got the banks to be willing to bet against themselves on their own credit default swaps. The whole story is just crazy. It's like, sure, we'll take your money, we'll take your premium for something that's never going to happen. And of course, that's greed talking on the bank side, right? But it was a wild time in the world, not just America.
Yep. So going back to Disney for a second,
Sure.
it basically was retesting the 9/11 lows.
Oh, okay.
So that was like the 9/11. Like there was a lot of stuff that happened in 2000, right? Or
Yeah.
post 2000, you had the dot-com crisis, the 9/11 attacks. The world was essentially on the
Yeah. No, I mean, that makes sense for Disney. There wasn't a streaming, right? There was no Marvel. There was parks basically in 2002, 2003.
Yeah.
Why do you want to go to a park when you're afraid for your life, right?
Yeah. So we're essentially back at that point. So I think if it does break underneath, you have opportunities to buy probably above the 67 range, right? Which is still another $17 down, which is, I think, gets you that 30 something percent. But yeah, this is when I start to look for bottoms, because there's so many confluences here that unless Disney is going bankrupt, and they have Bob Iger back, which is always a good sign, and it's still weak. So
there was rumors going around, excuse me, that Apple could buy them. I mean, Apple could buy anything they wanted to buy, but I don't know why Apple would buy them.
That makes no sense.
Yeah, I know. So I said,
Jesus. We now want to get into parks and recreation. What the hell?
no. I mean, Apple already has a streaming library, right? Like, obviously Disney's catalog is much bigger, but why do they want to be on broadcast? Why do they want to own broadcast television? Why do they want to be in parks? So yeah, I don't get it.
They can partner with them, but buying them makes no sense.
No sense. We got about 10 minutes or so left. Next week, we're doing our stock for the quarter GP. We need to remind Nick that he needs to get his thinking cap on. I'll text him in the morning. But yeah, next Monday, Labor Day, we'll still be doing a show. We'll be here, and we will announce, we're having a little challenge between the three of us. What stock is going to perform the best from September, what is that, 4th? Will that be Monday?
Yep.
September 4th for one quarter. That's 3 months. So September, October, November. We're going to come back to you in November, and we're going to see who has the best stock pick between the three of us.
Yeah. Do you want to open it up to our audience too, to say?
Yeah,
hey,
I mean, if people want to be part of our challenge, they can do that.
we can throw up a little Excel file to kind of gather it all.
Yeah, I like that. That's a great idea, GP. Everybody in the chat down with that idea? Randy's going to give us something nobody's ever heard of, and it does like 80% in the quarter.
Yeah, instead of pave, it's going to be rave.
Crazy. I'm not gonna lie, I've been doing some homework. I've been looking around on what I think it's going to be, GP. I'm not going to give any hints yet, but is there a minimum market cap required? That's a great question. No penny stocks. What we just want to say it has to be $10 or above?
Sure, because you can have a stock that goes from $1 to $2 and you're going to crush us.
Yeah. So it at least has to have a price of $10 or higher. I don't want to make.
And let's say there's a market cap of a B at least.
$1 billion. All right, market cap of $1 billion. Nothing below $10. I must be at least.
And it's closing prices. It's closing prices. So even if you're up 300% on December 30th and it drops 299%, on December 31st, you're SOL.
Well, let's make the date. Hang on. Let me pull up the old handy dandy calendar here.
It's
So
29th of December.
if we do this on it would be the 29th of December.
Yeah.
It'd be 90
First
days.
is a Sunday.
$90 days would be December 3rd.
Okay. You want to do end of quarter or 90 days?
Well, everybody should be coming through earnings in 90 days from now. Earnings is wrapping up this week for the most part. So I just say it'll be December 4th.
Okay.
December 4th, right?
That works.
That's a quarter. That's a quarter of the year.
Yep.
It's not a clean quarter like you wanted it to be, GP, but it's our quarter.
That's fine.
We're going from earnings period to earnings period. I'm going to put this on my little map here. PAL. Stock challenge TA report. I multitasked. Done it. You guys got any questions? Anything you want us to look at in the chat? Anybody? Bueller? GP, you can
the last
with either
last week
you
of
like or
summer.
something.
What's
Sorry,
that?
GP, go ahead.
I'm saying it's just the last week of summer, so people on vacation and the markets literally didn't do anything today, right? So,
well, that's a matter of perspective. It did a great deal for me this morning.
No, I don't mean trading wise. I mean like
yes,
price wise.
Action. Yeah.
Price action.
Eswar asks for ENPH.
I think we talked about this one.
Looks kind of poopy.
Yep.
I don't see nothing there that I like, Eswar.
Yeah, 1.7 possibly.
I think it's got to recover like this 132 level before I like it.
But that's what 1, 2, 3, 4, 5, 6 straight weeks of selling.
In
So far,
any
this is
shape
the
or
first
form.
week it has not made a new low. So that's always a good sign.
It is.
Is it a great sign? No.
No.
Not at all. It did break the 200-week moving average, which is rising. So that's always a good thing because it will mean revert. The question is, will it mean revert from 107 or will it revert from 80? I don't know, but that doesn't look great.
Yeah, I don't know where I see it bottoming, Eswar. I mean, it's pretty clear right here if you just draw just a straight pivot. I think somewhere around here probably. That's like 116, 117 area. I think below that you get in trouble. That low candle is 118.57. That low candle is 113.40. That low candle is 108.88.
Yep.
So I would kind of use those candles as my guide. And I just ran this as a rough estimate, below 116. It's in trouble.
Yep.
It didn't, there's not a closing body above that. So
no, but you have the flat monthly cloud at 114.85. So that's a possibility as well. The rising flat cloud. So that's always good. I don't know what you've drawn there, but on mine it says 114.85.
On what?
It's just not on the monthly time frame.
Yeah, there you go.
Yeah. So kind of in that area. There's a lot of confluences. So
that's pretty good for me. Just eyeballing it. Not bad.
Yep.
Not bad.
But is this something you want to be in? I don't know, man.
I do not want to be in it here. There are better fish to fry.
Yeah.
GP is a vegetarian. There are better cucumbers to eat.
Ugh, who the hell likes cucumber?
I don't know, GP. I don't know what vegetarians eat.
Food. We eat food,
I
apparently.
know.
Yeah.
GP's favorite, Netflix.
I like it. Has it done anything? Will it do anything? Who the hell knows? It trades like shit 11 out of 12 weeks of the quarter. It's also gone sideways since May 30th. It tried to break into the gap from January 2022, got rejected on earnings, came back and retested the gap close from that same day at 397.50, almost to the penny. Got to 398.15. It has now spent 3 days going through and testing each of the 3 sell bars from post earnings. It's such a low float that the smallest of options when people aren't buying makes it move up and down. As you can see from the intraday chart today, if you're looking at the 5-minute chart, it literally tagged that 419 level nearly 4 times and rejected on 3 of them. Right. So it'll go when it goes ultimately. I'm not worried.
As long as it holds this
397.50.
yeah, I got like 380 something here.
Yeah.
As long as it holds that, I think it's fine. Above the 50 monthly is good too. That's at 407.
It reclaimed the break of the 200 week from last week. It reclaimed it. So
yeah, so I think GP has said this well and multiple times. It trades like crap, but the setup for longer term doesn't look bad to me.
Yeah, and another stock that's been sideways since 2018, right? We tagged 423 in 2018, and on insanely better fundamentals.
Yeah.
So this is, we're already like on so many stocks, we're already at like lost half a decade. Square,
Randy,
PayPal,
FLR.
is that Floor? Yep.
Who's Floor? I don't know Floor.
They're a big
Engineering construction. All right. The weekly looks good, Randy. It looks like it wants higher. Monthly looks pretty good. Randy's always hitting us off with these names. It held the, I'm guessing that's an earnings gap. Yep. It's holding the earnings.
Does Randy
gap.
trade or does he just invest?
That's a great question. Randy, are you a trader or are you an investor or a little bit of both? Do you dabble in both?
We'll have to wait for that. But like a lot of his stuff is great from investment perspectives because it's not mainstream stuff, and so it kind of just does its thing over time. Whereas you'll see a lot of times, like in the chip sector, you'll see a lot of the chip stocks do well, and then for some reason NVDA and AMD are doing crap, and you're like, what the hell?
He's a swinger. He and the missus swing.
Okay.
I mean, he and his stock swing.
ARLP. What is that?
Alliance Resource Partners. That sounds like an energy name. Coal.
Beautiful flag on the monthly, and it's just breaking out.
Yeah, the monthly actually looks really good. Is coal coming back? King Coal.
It made higher highs. I like it. I'm sure there'll be people calling for the head and shoulders like they do in the SPY and the Qs.
I want to see it get above the 50 here on the weekly. It's definitely been a pivot. As you can see, it used it as support, and then when it fell through in March, it's used it as resistance. Yeah. So I would love to see it get through that 2051 in the short term. But other than that, the monthly, as GP points out, looks really good.
Yeah.
Lower time frames look good.
Yeah, you have
not a lot of volume, not a big trader, but
no, declining 50 week though. That's interesting. while it's been in a fairly decent uptrend over the last 2 or 3 years. So you want to see that start curling up too, and then the
Yeah.
stock starts behaving better.
Yeah, but it's got to get above that. It's got to get above it for it to start curling up.
Yeah.
So I would want to see it beat that. This is not financial advice. This is only our opinion on the chart.
Yes.
Path. Killer dividend. JC, what kind of dividend we talking? Path.
I know. I think he's talking on ARLP, killer dividend.
Yeah. He's talking about ARLP's dividend. I'm just saying what kind of dividend. And the next question was
14%.
Eswar Path. Whoa, 14%.
That's probably a red flag.
That is a giant red flag.
Yeah.
Path's just faffing around.
Yep. All these names that look like they were building are now at, like, at the middle of their bases. There's a lot of volume in Path. It's holding above the 50-week.
This is another AI name, right?
Yeah, I think so.
Said check the dividend history. All right, GP, we're running out of time. What do you like or what don't you like? We'll keep it to one or the other.
I don't have a lot to like because nothing's moving. But
enough.
one that has been in a really constant, steady upstream is ROST.
ROST.
Raw
stores. Sound like clack.
And it's looking like it wants to go higher, right? So this is one that I think looks good, but it's a slow mover, so it's hard to do like trading.
They just came out of earnings. Earnings must have been okay. Move up. A name that I haven't said much about lately, Qualcomm. I know GP doesn't really particularly like this name so much, but I like it down here in around this 110 area. It got down to 10. Well, the lows was like 100, but I kind of like it down here in this area. If semis are going to come back, Qualcomm's going to be part of that. It's got a nice little
fill
divvy.
The gap looks good.
Yep. A nice little divvy. Not every semiconductor has a dividend, but I like Qualcomm for a long. Obviously,
the other one is IoT as well, by the way.
Oh yeah, IoT. They report this week, right?
Yeah. So
still
this
on
could
my
be
watch list. I'll prove
could
it
be
to
the
you.
end of times, but
still on my watch list.
This looks good on the daily too.
GP said 95 on win. If you bought that 95 on win, you're up a little bit right now.
Yeah,
I did not buy the 95 on win. Randy's quoting Kramer. There's always a bull market somewhere.
Oh gosh, are we gonna have to ban Randy next week?
No. Lulu also reports this week. That was another name that we talked about last week.
Which took a dump.
Yeah.
Which has been taking a dump. So
anyway, hey, that's it for the show. A couple just housekeeping notes. We will be back next week for Labor Day. So we'll be full force. We'll start our quarterly stock pick. We will try to put out on all of our social networks where you too can participate. That should be fun. I'm firing the newsletter back up. So excited for that. That's coming. That'll be coming in September. So we'll be doing that. Always please like and subscribe and follow us on everything you do. We're still trying to get up to the level that we need to do some of these YouTube shorts because GP's tired of me putting them on TikTok with all the auto-tune voiceovers, but I like it. I think it's fun, but I'd really love to be able to put up some YouTube shorts. So that'll be coming once we get to the right number of hours watched and subscribers. So hey, tell a friend to tell a friend. We're just out here talking about things that we're all interested in. We have a little bit of experience. We're just trying to impart our knowledge that we've gained over years up on you. And if it helps you, great. We're just here as an educational resource. And we always appreciate you tuning in and watching. So hit that subscribe button for us. Do us that favor. And GP, always a pleasure to hang with you for an hour, my brother.